Michael Saylor's strategy has just announced a super sneaky way of selling Bitcoin under a program that is titled BTC monetization, which is a very clever marketing strategy. They intend to liquidate $1.25 billion from their 847,000 odd Bitcoin to fund their US dollar fiat reserve. Oh boy. And they don't stop there. They intend to sell Bitcoin to pay off dividends and interest on their preferred equity products and buy back some common A stock. Does not sound good. Yes, because it is not good, particularly in a bear market. If you hold any Bitcoin whatsoever, if you hold anything to do with strategy, watch this video until the end. Michael Saylor changed things up big time on Monday, the 29th of June. If you do end up enjoying today's video, please do me a favor and hit that subscribe button and turn on the notification bell. I was going to post a Bitcoin update right now, but when I saw the strategy announcement, I said, Crypto Kid, let's cover this first, and then 7 to 8 hours later, we can go and post our Bitcoin video. If you're curious on BTCTA, stay tuned. That's coming up tonight. Let's see if we can hit 600 likes. That would be epic, epic, epic. With that said, we can commence on what in the world is going on. Strategy's press letter commences with their annual expected preferred stock dividend payments, additional to their interest expenses, being at $1.76 billion. They increased their cash reserve from 1.3-ish billion to $2.55 billion by diluting further MSTR shareholders when the MNAV is clearly below 1. Below 1. What does that do? It hurts shareholder value. Yes, initially we're getting a small pump because they want to sell their BTC to buy back common A. But when you look into the macro picture, huge head and shoulders that we predicted here on this channel at $112. I'm not a buyer of MSTR in the bear market. Would I be a buyer in the bull market? Yes. I just think it's better to have a 2x leverage Bitcoin position open though, as to having MSTR stock. I think that Saylor will be successful, and I think that this is eventually all going to work out, even if it doesn't look too good, because Bitcoin should become successful. But in the end, you know, they have the intention to sell Bitcoin. Saylor had said, hey, look, listen, sell your kidney if you must, but don't sell your Bitcoin. And he went on stage in Bitcoin Prague literally this month telling people, no, I meant you don't sell your Bitcoin, but not the company. It was the most hilarious clip ever. It was the most hilarious clip ever. We played it on the Moon Show channel. And they're changing up. They're changing up how they function, according to Fong Li, the CEO of Strategy, quote unquote. Their company is evolving from one-way capital issuance to active capital management. In pleb terms, that is steering away from buying Bitcoin every Monday to trying to bring back their preferred equity products to parity, which was what they have promised. And to do that, to escape this abysmal monstrosity of huge decoupling from $100, Stretch was their genius vehicle that would stick to $100, strip away the volatility of Bitcoin ownership or MSTR ownership, and pay you a dividend of 11.5% twice per month, divided into 24 months per year, or 24 times a year. What happened? We're down 25%. Even if you got that dividend, it's still not profitable to be an STRC owner. So things didn't work out too well. No buying pressure on Stretch, resulting in less buying pressure of Bitcoin, causing dilution of common A stock for forced purchases, and raising cash reserves to pay off interest and dividends to existing owners of these preferred equities. They have no chance but to sell the BTC. They've got to sell the BTC. If they don't sell the BTC, then these will keep on going under, and Strategy's creditworthiness will deduce. And then they would have to sell more Bitcoin in the future to preserve and protect that. Bear markets don't end in an instant. In the bull, everybody's happy, everybody's making money. MSTR should then fly again, and these preferred equities should go back to parity again. But bear markets are not like small dips and corrections you experience in the bull. No, no, no. They are prolonged. And for a company like Strategy, they need to manage capital. They need to manage capital in a way where their products just don't go bust. And with 847,000 Bitcoin, they can afford to sell a couple 10,000 of it to fund their debt obligations. And once the bull begins, they should hypothetically, with quite significant probability, buy much more BTC than they end up selling. Hence the new key term that Saylor lives by: buy more Bitcoin than you sell. I've waffled around a bit too much. I'll explain you the Bitcoin monetization program in just a few minutes time. But to wrap up the USD policy, the USD reserve policy, they had 17.4 months of coverage, but with the new, or sorry, they had less, but then they diluted MSTR share value, which brought up their dividend coverage to 17.4 months. And if they sell the Bitcoin they intend to sell, then that figure will go from 17.4 into, let's see, into 25.9 months. 25.9 months, increasing shareholder confidence or preferred equity confidence, and that should be a path into trying to restore parity over there. With STRC, they as expected, they've brought up the dividend from 11.5 to 12%. It's not lucrative enough to shoot you to $100, but it is something. It is something will be activated from July 1 and onwards. MSTR doesn't have a profit-making business. They've become only a Bitcoin treasury company. So their only profits come from them realizing profits on their Bitcoin. If they don't sell the Bitcoin, yes, they in the bull market have tremendous amounts of unrealized gains. But if you don't sell, then your company isn't making any money. And if you don't make any money, you can't pay off dividends on MSTR, nor can you pay off the coupons for your preferred equity products. This is the thing. So they're forced to sell Bitcoin. They're forced to sell Bitcoin if the bull market comes in place, just like every 4-year cycle. My expectation, the selling pressure will be super short-lived, and they will accumulate above and beyond during the bull market as Bitcoin recovers. So is it really a good time to buy into these things? No, I'm not. I'm avoiding it. Too much unnecessary risk and variables, unknown variables are involved for me to go and buy the likes of Stretch. I mean, they say in their own newsletter or press letter that Stretch dividends remain subject to declaration by the board of directors or an unauthorized committee and are not guaranteed. They say it's not guaranteed. 1 month they may decide to pause Stretch dividends to not sell Bitcoin. It's too up in the air. I would go and buy my Bitcoin, put it in the hardware wallet, case closed, done. Nothing more that I need to do. That is the pathway which I'm opting in. If you want to buy into these at a relative discount, then of course be my guest. But I'm just telling you what I'm doing. My strategy is buying Bitcoin, the underlying asset which all of these things live upon. I'd go and open a 2x long position on Weeks, BTC, or LevX, which if you want to check out our partnered exchanges to get the best bonuses available, you can do so using the links in the description. I would much rather have a 2x, 3x long position than right now owning MSTR. That's the sad truth. Don't get me wrong. I think Saylor is a genius. I think Saylor is going to make it so hugely in terms of net worth and success as the years go on and on and on. Not for me, though. I'm wishing him the best of luck, but I would stick to my own BTC. In the bull market, I decided to go in and diversify my portfolio a little bit into MSTR. And I'm keeping that. It's still there. I sold some. I'm keeping a small chunk, which doesn't really mean much if I sell it, so I'll keep it. no point in liquidating those shares. I wanted to give something new a try, but the more I got involved, the more I researched, and the more I understood Bitcoin on its own is way more than enough. Okay, time for the Bitcoin monetization program. We've covered the major points. I mean, they want to sell 1.25 billion initially to fund the USD reserve, but they could fund preferred stock dividends and interest expenses as they become payable, or replenish the USD reserve after such payments with more BTC on the pipeline to go and be sold. Additionally, if MSTR stock is too undervalued, and it is too undervalued, 0.63x the MNAV is ridiculously cheap. They could even sell the Bitcoin to recover the MSTR stock. If you're a shareholder, that is a good thing. If your shares are dropping less than what it should, or if they're recovering in a bear market, that's great for the shareholders. Saylor and Strategy care about the shareholders of their company. They don't really care about their impact on the Bitcoin price action. And to be fair, even if they sold 100,000 Bitcoin over 12 months, not saying that they will, they probably will not be doing that, but even if they did, really wouldn't hurt Bitcoin so much. So all of this is an understanding of, okay, maybe, at least to me, maybe buying the Bitcoin and observing strategy related products is the way to go as an investor. And if you are a shareholder, then this is, in the short term, good news. In the macro, a little bit ambiguous still, particularly the preferred equities. And you know what? Worst case, if they offload a bunch of Bitcoin, which I don't think they will do, fine. Bitcoin will survive. Bitcoin will be okay. Bitcoin will be just okay. And they say it, they could get rid of the Bitcoin monetization program depending on BTC's price performance. Like if we reverse the bear back into a bull, then they could eradicate all of these things. It's a capital management company. They've got to be pragmatic. But to anyone who believes that strategy is going to get liquidated and margin called, that is where I draw the line, guys and girls. Their debt to Bitcoin ownership ratio is a 0.1. So they have almost 10 times the assets available to pay off their debts. Even if Bitcoin dropped 50% from here, they would have 5 times the assets to pay off their debts. It's quite improbable for them to get liquidated, margin called. Their convertible notes are due a long time from now, and it's like $1 billion to $2 billion maximum that's in the closest expiration date. They will be fine. They won't get liquidated. But if they must sell the Bitcoin in the bear market to preserve their products and their credit worthiness, they'll do it. But in the bull, they will buy more Bitcoin. Short-term bearish, macro bullish. That wraps up this update. I hope you enjoyed it. If you did, destroy the like button and subscribe for my BTC TA coming up later on in the day. Thank you so much. And as always, guys, see you. Bye-bye.